On today's show, it is all about some pretty serious passive income. So grab yourself a brew and we will begin right now. An income trust is an investment that holds equities, debt instruments, royalty interests, or real estate. Yes, a REIT is a real estate income or investment trust. REITs are one of the types of investments that fall under the income trust umbrella. Income trusts also have investment trusts, which are better known as mutual funds, royalty trusts, and also business income trusts. An income trust will have higher distributions in the form of dividends because they are designed to pay out consistent cash flow for investors. In addition to this, they are usually not allowed to invest in companies outside of their stated business. Thus, generally, an income trust based around the financial sector will, in most cases, not invest in an oil company. There are exceptions, and some of the ones we will be looking at today do indeed invest over multiple sectors. Huge dividends paid out consistently sounds awesome. Well, there are some downsides to be aware of. One of the big concerns is that since an income trust is paying out most of its equity to the shareholders, there is often not much left over to invest in their growth. Some income trusts are prioritizing their payouts to the point where they are paying out more than they are netting in income. Obviously, this can have serious consequences for them and pose a danger for the investor. This can be mitigated by doing your due diligence and closely watching the stocks you have invested in. Now, perhaps the bigger concern is how they are taxed. Income trusts are not taxed the same way as ordinary stocks and ETFs. The trust does not get taxed on all the cash distributions it is sending to the shareholders, and as a result, will often have very little to no taxes to pay. These taxes on all that money are passed on to you. Of course, if you keep your income trusts in a registered account, this is not an issue at all. However, if you are holding them in a non registered account, there are tax implications you need to be aware of. First off, capital gains work the same as they do for stocks, so there is no concern there. However, the dividends are a different story. They are 100% taxable, but if the income trust invests in Canadian assets, then you would still qualify for the Canadian dividend tax credit. It can be more work with your taxes. Then again, it is just easier to place income trusts into a registered account. They are a great fit in your TFSA or RRSP. With that being said, let's take a look at 10 income trusts with some very nice dividends. These 10 companies are in no particular order, and we will begin with Income Financial Trust, which has a ticker of INC.UN. They are a mutual fund trust that invests in a diversified portfolio consisting of shares from the TSX Financial Services Index, the S&P Financials Index, and the S&P Midcap Financials Index. Their dividend yield is an awesome 10.39%, which is paid out monthly in the form of 12.6 cents per share. Their earnings per share, or EPS, is 2.38, which is great as they are not one of those trusts losing money every month. On to our next trust, which is Mint Income with a On to our next trust, which is Mint Income Fund with a ticker of MID.UN. They are a closed-end investment trust with investments in high-income securities from multiple sectors across North America. Their dividend yield is an impressive 7.39%, which is paid out monthly in the form of 4 cents per share. Their stocks are a little on the cheap side. Their EPS is 1.77, which is good as they are also not one of those trusts losing money. However, with their share price being so low, I would take caution nonetheless. Our third trust is Chemtrade Logistics Income Fund with a ticker of CHE.UN. They provide industrial chemicals and services to primarily North and South America. They are a little bit different in that they have their own products, but nonetheless, they have set up an income trust. Their dividend yield is a very solid 8.32%, which is paid out monthly in the form of 5 cents per share. Their stocks are also a little on the cheap side. Their EPS is negative 1.82, which is concerning as a negative EPS is not sustainable forever. With this one, good dividends, but you want to utilize a little extra caution. That brings us to Mesa Royalty Trust, ticker of MTR.US, which invests within the gas and oil sector. So we already know these numbers may be good. Yes, this is an American one, so you definitely want to have this one in your RRSP if it is one you're interested in. If you place this one within your TFSA, you will still be paying a 15% withholding tax on those dividends, as the United States does not recognize a TFSA as a registered account. So best to stick with the RRSP on this one. Their dividend yield is an earth-shattering 19.47%. Holy banana bread. That big payout is made monthly in the form of 13 cents per share. Their EPS is 0.29, which is still positive, but I would still exercise some caution with this one. Okay, if you know me, you knew this one was coming. And here it is, Canoe EIT Income Fund with a ticker of EIT.UN. They are a closed-end income trust with a diversified investment within financials, energy, and healthcare sectors. Their dividend yield is a very nice 9.27%, with a monthly payout in the form of 10 cents per share. Their EPS is 4.81, which is pretty good for an income trust. No extra care needed, but you should still exercise a little bit of caution for any trusts, even the better ones. Up next, we have Slate Office REIT with a ticker of SOT.UN. They are a real estate investment trust that specializes in Canadian office holdings. Their dividend yield is a good 7.97%, with a monthly payout in the form of 3.3 cents per share. Once again, we have another cheaper company, so that alone makes me want to add some extra caution with this one. Their EPS is 0.58, which is positive, but still be extra careful with this one, especially when you add in how cheap they are. Our next one is another REIT, and it is the BTB Real Estate Investment Trust with a ticker of BTB.UN. They are also specialized in office real estate and retail as well. Their dividend yield is a good 7.5%, with a monthly payout in the form of 2.5 cents per share. And again, we have another cheaper company, so that still makes me want to add some extra care with this one. Their EPS is 0.31, which is positive, but like the previous one, we want to be extra careful on this one too. And one more REIT for today's list. This one is Inovalis Real Estate Investment Trust with a ticker of INO.UN. They also invest in office properties in Canada, France, and Germany. Their dividend yield is a stellar 8.55%, with a monthly payout in the form of 6.9 cents per share. Their EPS is 1, which is okay. That would be nice to see it a little higher. Nonetheless, a little caution is still warranted. Up next, we have Diversified Royalty Corp with a ticker of DIV. They are a royalty trust with many investments across North America. They love to purchase the trademarks of the companies they invest in, and that strategy has helped them maintain their consistent payout. Their dividend yield is a very solid 7.97%, with a monthly payout in the form of 1.8 cents per share. They are a little small, and by now you know that means extra care. Their EPS is 0.14, which is not too far on the positive side. Definitely some amount of caution is needed here. We have our final income trust, Labrador Iron Ore Royalty Corporation, who has a ticker of LIF. Yes, if you've been following the channel, we have seen these guys before. They receive royalties from the Iron Ore Company of Canada, specifically a royalty on all iron ore products produced and a commission on the sale of iron ore. Their dividend yield is a nice 12.25%, with a quarterly payout in the form of $1.15 per share. Their dividend does move a lot, so it tends to move up and down quite a bit between quarters. Their EPS is 5.87, which is fantastic for an income trust because they maintain a little more of their profits. They do grow, and some amount of stock growth is likely with this one. When investing in income trusts, you always want to bring a good amount of caution with you. I am not a financial advisor, so these stocks I have presented today are for education only. They are the beginning of your research, while a financial advisor is the end. If you like the content I am bringing to you, please feel free to hit like, subscribe, and ring that notification bell. If you are looking to support the channel, then there is also a Patreon link below. Thank you for spending some time with me. I will see you in the next video, and until then, I bid you a fond adieu.